TikTok is probably the most headline-grabbing item in terms of this clawback trend. China is saying it can't let go of the Panama Canal for national security purposes. I think China and the US have already been engaged in a very high-stakes geopolitical rivalry for a number of years, and the clawback is just part of that.
The US is on the warpath, looking to liberate industries from foreign influence, especially China. While TikTok might be top of mind for many social media users, the United States is also turning to its own backyard, the Panama Canal. For more, we're joined by Juliana Bouchot, a senior analyst at Rhodium Group. Juliana, thank you for joining us.
Thanks for having me.
I want to start with this paper that you co-authored about this so-called clawback. Could you outline the United States mission here and what exactly they're trying to claw back?
Right. I wouldn't call it necessarily a mission, or at the very least I would say it's an unspoken mission. I don't think this has been something that's articulated in a policy or a speech. I don't think we're going to see a Trump executive order that's saying we need to claw back, get back Chinese-owned assets. But what we've seen in the past few months is a collection of case studies where the US has been using various forms of political pressure and regulatory instruments to essentially make Chinese ownership of certain companies or assets untenable, to the point that Chinese parents are considering divesting, or at the very least distancing themselves from those assets.
TikTok, as we mentioned, is the highest profile example to date of the US trying to take over a Chinese asset. What are the broader implications of the TikTok saga?
That's right. I think TikTok is probably the most headline-grabbing item in terms of this clawback trend, but it has implications far beyond the individual fate of TikTok. What we have here is a situation where Congress, the US Congress, was growing increasingly frustrated and anxious at the idea that an app that's enjoyed so much popularity in the US is ultimately owned by a Chinese company, ByteDance, and passed a legislation, the Protecting Americans from Adversary-Controlled Applications, which states that these foreign-controlled applications, such as TikTok, must perform a qualified divestiture, that is to say, sever their ties, their ownership, their operational ties to their Chinese parents, or face a ban in the United States. Now, what that means is that Congress could potentially, use this bill once again to require other Chinese-owned applications. I'm thinking of, Temu or Shein, which have drawn quite a lot of scrutiny.
Also very popular.
Exactly, to potentially perform this sort of qualified divestiture. Or we could see, Congress try to replicate this idea of qualified divestiture in other sectors where Chinese ownership is increasingly being seen as a liability.
When we talk about a clawback, what kind of companies are we talking about here? Because something like TikTok isn't top of mind for me when I think about a strategic asset.
As we say in the note, the idea of the clawback is rooted in remorse. In the early 2010s, we start to see the expansion of Chinese global outbound investments. Chinese firms were largely shielded from the effect of the 2008 financial crisis, and they go abroad searching for new markets, new opportunities. And we really see that peak in 2016 when Chinese FDI hits 200 billion by our estimates. And after that, China reins in capital controls and it starts to decrease. But during that period, during that heyday of Chinese investments, there are scores of transactions where Chinese firms acquired pretty strategic firms in the US and the EU that gave them access either to very prized technology, or that helped them was a springboard for those Chinese companies to become dominant, to become the champions in their respective sectors today. And the US is now seeing those transactions as a liability that needs to be unwound. And it's true that we wouldn't think of TikTok as being, national security relevant per se, and that's not to say that any of those transactions at the time weren't clear by U.S. inbound investment screening, right? The U.S. did have the tools at the time and did clear many of those transactions. It's more that today, I think the concept of national security has evolved and encapsulates much broader concepts such as, economic security, supply chain dependency, and that's why the clawback is targeting, a broader set of sectors.
Something that jumped out from the report from Rhodium that you co-authored was this idea that the U.S. is bound to seek shortcuts in response to the sense of urgency that you outlined. What kind of shortcuts are you potentially anticipating?
By that we mean that, it's no secret that the U.S. Wants to de-risk its supply chains away from China. It wants to phase out China origin inputs in its network, its critical infrastructure. It wants to rebuild its manufacturing base so that it can compete once again. All of that takes a lot of time, effort, and money. Something like clawing back assets is obviously a quicker, swifter path to it.
What sectors are we talking about here that seem to be a U.S. priority for a clawback? You mentioned manufacturing, for example, but that's quite difficult. Of course, a favorite topic of President Trump is the need for semiconductors. So what sectors are important for a potential clawback for the United States government?
I think there's no one sector that's going to come to the fore necessarily. As I said, this isn't part of a top-down mission that the U.S. has outlined. So, this will be a collection of sectors where Chinese ownership or Chinese firms have become dominant, and this is seen as a liability. In the note we outline various case studies of prior examples of this clawback trend, which are all very different. And we see it happening in various sectors. We outline semiconductors, we outline biotech, the auto sector. It's a very all-encompassing effort.
You mentioned liabilities. What's the fear here? Basically, what's the U.S. afraid of?
Well, this will depend on the individual case at hand, of course. The theory of harm that the U.S. will be expressing will be different based on the firm or asset that's being targeted, right? In the CK Hutchinson port deal example, the U.S. theory of harm that's being articulated by President Trump here is that CK Hutchinson, a Hong Kong conglomerate, effectively has control over the Panama Canal, which sees about a third of U.S. containerized trade flow, and this could also be a choke point for U.S. military naval movements.
Semiconductors have seemed to be a priority for 2 U.S. administrations in a row. Are we expecting semiconductors or similar technology to be part of this clawback?
Absolutely, and I think we're already starting to see it operate. For example, Nexperia, which is a Netherlands-based semiconductor company which manufactures mostly legacy semiconductors, which is a sector where China has become very dominant, at least in terms of the manufacturing share that they hold. This was a company that was ultimately acquired by a Chinese firm, WingTech, a few years ago. And we've seen several governments, not just the US, trying to limit the influence that WingTech can have over Nexperia. For example, the United Kingdom blocked a acquisition that Nexperia sought to do of a manufacturing facility in Britain. And now more recently, in its update of semiconductor export controls in December 4, the United States put Nexperia's parent owner, WingTech, as well as several firms which were involved in the acquisition in various ways, in various financing channels, on its entity list, which is an export control list. And that's essentially turning the Nexperia ecosystem as a liability and forcing Nexperia to reconsider its ownership structure.
Based on how you were explaining this whole saga, it makes me wonder what the risk is for European companies if they realize that part of their stake might be owned by a Chinese company. Are they going to be realizing that they have a problem suddenly?
I think so. I think that's fair to say that European companies that have, come under Chinese ownership or that have, a Chinese stake are increasingly going to be caught in the middle and face U.S. pressure. I think we're going to see a situation where the U.S. more and more is going to leverage access to its market to impose conditions on those companies to, at the very least, keep Chinese owners at arm's length. An example that comes to mind is Volvo, right? A Swedish car maker that was acquired by China's Geely a few years ago. Now, the US has established new rules around connected vehicles technologies to force companies selling into the US to phase out China-made or made by Chinese companies inputs from vehicles. And from 2027 onwards, any vehicle that was made by a company controlled by China will be banned from sales in the US. So for a company like Volvo, which makes 18 or 17% of its revenue in the US, this is going to be a huge topic, and it's obviously going to prompt some conversations at the board level about how to manage their Chinese ownership, of course.
We mentioned a little bit already this CK Hutchison deal with a BlackRock-led consortium to acquire control of the Panama Ports Company, and that seems like a major development, but can you talk about the significance of this conversation?
I think this is a hugely significant case study. I think it's a very striking deal on a number of levels in terms of its speed, its scope, and what it's saying about China's reaction already. In terms of speed...
Can you stop there? Can you tell us more about the China reaction before we talk about the speed? Explain to listeners, how fast has China been able to move? Because we hear often about China speed. So what did that look like here?
Of course. I mean, as soon as this deal was announced, whereby CK Hutchison, this Hong Kong conglomerate, was selling its stake in 2 ports in the Panama Canal, but not just, also its stake in 43 ports, 23 countries around the world to a consortium led by BlackRock and MSC. We saw reactions start to come out of Beijing. The state press ran several articles calling out the deal as unpatriotic, and there have been reports that Beijing instructed state-owned enterprises to pause their deals with the Hong Kong conglomerate. And now SAMR, China's merger control authority, has already said that it will be reviewing the deal on competition grounds. And so what that really says is, China is growing alert to this broader clawback trend and is not going to take it lying down. And it's going to be leveraging, I think, different forms of political pressure, and it's also a vast regulatory toolkit to try and disrupt transactions that it thinks are undesirable for its interests.
It's interesting because the Chinese government's hostile reaction to what was essentially a private company selling assets, that reaction does seem like a big deal. Do you think it's showing its hand, the Chinese government, on how much state control there really is of private assets? Could China stop the Hutchison deal, for example?
I mean, I think it'll certainly try and see where it has leverage. I think there are multiple factors at play here. First and foremost, this is obviously a critical asset. I mean, several critical assets, right? We talked about the scope of the deal. It's not just about the 2 ports in the Panama Canal, but it's about CK Hutchison's stake in ports across the world. And there are reports that, Beijing's leadership, Xi Jinping, were not consulted prior to the deal being announced. So, of course, they're caught off guard by this, hence the stronger political reaction. But, it's also a broader reflection of the fact that Beijing is growing increasingly anxious at this trend of, U.S. trying to claw back its assets. If I'm Beijing, I'm wondering whether, this clawback trend, what this means for the future of tech champions and whether or not it's even worth them internationalizing if they're going to be facing this sort of pressure.
You talked a little bit about this kind of general reaction, so let's zoom out there for a moment. There's an unspoken grassroots, so to speak, clawback strategy from the United States. Can we expect either a grassroots or a very strongly top-down backlash from the Chinese government to what seems to be this observable pattern from the United States?
Yeah, absolutely. And the C.K. Hutchinson reaction is already a signpost that a stronger reaction is coming. Now, China has various things that it can leverage, informal tactics, political pressure. It has also got a regulatory toolkit that it can use. This includes things like national security reviews of transactions, right? Just like the US has an inbound screening regime that's led by CFIUS, China also has an interministerial mechanism that is supposed to review transactions in strategic sectors, not just when a foreign investor invests within the borders of China, but also when they obtain equity or assets of Chinese companies. So theoretically, this interagency mechanism could probe transactions and choose to impose conditions on them if they decide that there is a national security risk, or even prohibit them outright. China's Merger Control Authority, SAMR, the State Administration for Market Regulation, also has very expansive powers and can call in transactions on competition grounds. With the C.K. Hutchinson deal, it's already said that it will be reviewing the transaction. And that opens the door to SAMR to potentially impose remedies, as they're called, or conditions on the deal, or even block it outright. In recent years, we've seen SAMR grow increasingly geopolitical and has tanked quite a few very large profile M&A deals. Then there are other tools that China can rely on. Its securities regulator, the CSRC, has pretty broad powers and could call in, Chinese firms trying to list abroad or trying to raise shores abroad on national security grounds. It also has various sanctions instruments that could come into play here.
Can we expect China at any point to turn the tables and try to claw back any of its assets from the United States or potentially even Europe?
I mean, that's certainly a possibility. China, has a tit-for-tat retaliation apparatus that it's been developing in recent years to respond to growing geopolitical pressures from the US and Europe. But I think something that's more interesting and that's really going to come to a head is when China tries to intervene in these US clawback attempts on national security grounds. China's national security argument is essentially going to be pitted against the US's own national security argument. And that comes to a head, and it's unclear how that situation evolves, right? The US is saying they need to reclaim control of the Panama Canal because they need that for national security purposes. China is saying it can't let go of the Panama Canal for national security purposes. And that's, a larger debate that's going to come to a head.
When we say that businesses or corporations need to pick a side, are there signs that more Western companies are going to be picking a side, but that side might be China?
I think the way we write that in the note is really referring to something quite specific in the regulatory sense. We're surveying options that Chinese companies or Chinese-owned companies might have to sort of keep their Chinese parents at arm's length, or to start the process of, preemptively divorcing their Chinese parents because they're feeling the regulatory heat coming down and are finding, ways to get a head start. And there are several different ways that we list out in the report, which are for these firms to do without attracting, regulatory scrutiny from China, which doesn't necessarily see those moves as being in its interest. And of course, picking a side in the sense of registering your business elsewhere is one of those options.
Will this clawback plan, in your view, ultimately put the United States on a collision course with China?
Yes, absolutely. As I was saying, I think it's two national security arguments that are going to be pitted against each other. That being said, I think China and the US have already been engaged, in a very high-stakes geopolitical rivalry for a number of years, and the clawback is just part of that.
Juliana Bouchot with the Rhodium Group, thank you for joining us.
Thanks so much for having me.